Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Affirm. So Affirm is one of the hottest stocks right now. I want to talk about the fact that it's not a cheap stock at 22 times forward sales. It's incredibly unprofitable, but it is the leading buy now pay later company. So we're going to talk about this, we're going to talk about its guidance. So let's just jump right in. So here's the thing, right? So the guidance for Q1 is for 44% year-over-year growth rates, okay? So keep in mind, look back, Q1 21, the stock was up the revenues were up 98% year-over-year. So that's going to be the most challenging comparative relative to the rest of the year. So if the guidance for Q1 is for 44% growth rates, then if you think about it, that's going to be the most difficult comp. The rest of the year is going to be a breeze. So even though the company is guiding for 39% year-over-year growth rates for the year as a whole, it's more likely than not, this is really conservative. The company is going to just obliterate this growth rate, in my opinion. Now, one more thing I wanted to highlight. This guidance does not include any GMV from Amazon. So any revenues that come out from its non-exclusive deal partnership with Amazon is not factored in here. So if you think about it, there's probably going to be even more of an upwards revising of its guidance throughout the next several quarters. So this is very attractive. And yeah, so let's just continue here. So one of the things that I want to highlight is the stock has just rallied significantly, okay? So you can see that starting the back end of August, the stock has just been on an absolute tear. Why has that happened? So here's the thing, right? So there was the non-exclusive deal that I already discussed with Amazon, and that really put Affirm back on the map. You know, it was a very hotly followed stock when it IPO, but then it fizzled out. But then when they did non-exclusive with Amazon, everyone's like, oh right, whoa, what's going on here? So there are three reasons why I believe this is important for Affirm. First, awesome marketing. That doesn't even need to be explained, right? Secondly, if Affirm is partnering with Amazon, it's going to be more revenues coming in. Thirdly, the ability to get mind share with the consumer is just going to soar. This is just free marketing for the company. So if you think about it, Amazon is basically saying, Affirm is basically saying, hey, we are with Amazon, why isn't your company? And you know, customers are just going to love this. It's just going to be, so these are the positive points here that I want to highlight. One more thing I think is worthwhile discussing. Once the customer starts adopting Affirm, in the first 12 months, they only use it twice, okay? So there's only twice that they really get involved with the company. This takes a bit of habit forming. After the first 12 months, they use it approximately 10 times, okay? So if you think about it, it takes a bit of time, but once the habit is formed, it's really difficult to break. So that's compelling, it's very sticky. Now on a negative point, you can see here, okay? So for adjusted profitability, this, you know, a heavily adjusted margin, Q1 of last year, so Q1 21 was negative 5%, okay? And then it was a kind of trending higher, so that exited Q4 at positive 5%. So that's cool, yeah, your company, you know, growing top line, growing bottom line, that's cool, that's what you expect to see. The problem is that for the guidance for Q1 for upcoming 22, it's pointing towards negative 25%. Let me just see that, where I put that there. Yeah, so negative 25%, right? So coming off Q4 growing at 5% profitability adjusted, drops 25%. So you're like, oh my god, this is really unprofitable. But then for the rest of the year, it's kind of going towards negative 11%. So it has to be meaningfully improving throughout the rest of the year, so that the year as a whole is only negative 11%. So yes, you do have that kind of punchy, difficult quarter coming up, but then after that, it should improve, okay? Now, here's another thing, right? The stock is priced approximately 22 times forward sales. If you compare with Visa, MasterCard, these are, you know, transaction processing companies, they're priced at approximately 16 times forward sales. So in that line of thought, 22 times is really punchy. On the other side, remember, Visa and MasterCards, they have a gap profitability north of 50%. So for $1 of revenue, operating margin 50 cents. So it's like That's really, really profitable. These are just like printing machines. Compare that with Affirm. Affirm, I mean, it's not going to be sustainably profitable for a while, and when it does, it's not going to be highly profitable probably for the next 10 years. Like, you can look out 10 years from now and it's probably like still going to be nowhere near what these other two companies are doing. So this is a story stock. Story stocks don't come cheap. Affirm is the leading buy now, pay later in the US. It has a lot of competition. You know, I haven't even talked about the other I haven't talked about PayPal, haven't talked about Apple Pay, haven't talked about Klarna, haven't talked about Settle, I haven't talked about any of these kind of things. So I mean, it's just so much competition. Now, there's a competition in this space because it's a highly lucrative prospect. So yes, there is competition, that is a risk, but the market is expanding so quickly that on the other side of the equation, you can say the competition really just validates the business model. So, I mean, it is a difficult thing to kind of get around. The idea being that Affirm continues to take mind share on the other side of the equation, and Square just bought Afterpay, so that's, you know, Square's going to be really aggressive there as well. So it's kind of like, it's going to be an interesting play out. Anyway, hope you found this video useful. If you want to find out what kind of stocks I'm invested in and why, don't forget to check out my marketplace called Deep Value Returns. I'll help you become a better investor. Check out my reviews, see what other people have said about my platform. That's always a good way to get involved and find out and do your due diligence. But anyway, come on board, chat to me, and I hope to see you soon. Okay, bye-bye.